Welcome to Flippening, the first and original podcast for full-time, professional, and institutional crypto investors. I'm your host, Clay Collins. Each week we discuss the cryptocurrency economy, new investment strategies for maximizing returns, and stories from the front lines of financial disruption. Go to flippening.com to join our newsletter for cryptocurrency investors and find out just why this podcast is called Flippening.
Clay Collins is the CEO of Nomics. All opinions expressed by Clay and podcast guests are solely their own opinion and do not reflect the opinion of Nomics or any other company. This podcast is for informational and entertainment purposes only and should not be relied upon as the basis for investment decisions.
We're just about to kick off the second and final installment of this series on decentralized cryptocurrency exchanges. Like I said in part one of the series, I believe this is the best content you can find anywhere online about this topic. We really go deep in this two-part series. I'm joined in this exploration by Alex Wearn, co-founder and CEO of Aurora Lab, which creates IDEX. IDEX, if you haven't heard of it, is the number one decentralized application in terms of transaction volume on the Ethereum network. It's also a decentralized exchange. This two-part deep dive is broken up into 10 chapters. In the first part of this deep dive, which you can hear in episode 33 of this podcast, we discussed what decentralized exchanges actually are and the problems they solve, what it would take for someone to get to the point where they can actually execute a trade on a platform like IDEX or other decentralized exchanges, all the way from depositing money through post-trade settlement. We also discussed the history of decentralized cryptocurrency exchanges and the components and attributes of a decentralized exchange. Part two of this exploration, which is the material that follows and which you're about to hear, is comprised of 5 chapters. In chapter 5, we look at control and regulation and what decentralized exchange owners actually have control over versus what they don't have control over. Chapter 6 is a review of the top blockchains for decentralized exchange. In chapter 7, we talk about sourcing liquidity. Chapter 8 is about different approaches to exchange tokens. Aurora DAO has an exchange token. Binance has an exchange token. I believe Huobi and other exchanges more and more are creating these exchange tokens, and they seem to be doing well. At least Binance's exchange token is doing incredibly well. Chapter 9 is a look at the organization that creates IDEX, known as Aurora DAO. Chapter 10 is an exploration of what the future of decentralized exchange might look like. We're just about to kick things off, but before we do that, I wanted to provide 2 announcements regarding Nomics.com, the company that produces and funds this podcast. The first announcement is that this episode of the Flippening Podcast is brought to you by the Nomics API. If you need an enterprise-grade crypto market data API for your fund, smart contract, or app, then consider trying out the Nomics API. Our API enables programmatic access to clean, normalized, and gapless primary source trade data across a number of cryptocurrency exchanges. Instead of having to integrate with multiple exchange APIs of varying quality, you can get everything through one screaming fast fire hose. If you found that you or your engineering team have to spend too much time cleaning up and maintaining data sets instead of identifying opportunities, or if you're tired of interpolated data and want raw primary source trades delivered simply and consistently with top-notch support and SLAs, then check us out at nomicsapi.com. Announcement 2 is that Nomics, the company that creates and funds this podcast, just launched our forums at forums.nomics.com. Prior to being forum-based, our community was on Telegram, and we're really happy that we switched away from Telegram. Anyway, if you want to discuss this podcast episode or any other Flippening podcast episodes, please join us at forums.nomics.com. Okay, back to our regularly scheduled program. Here, without further ado, is part 2 of our deep dive on decentralized cryptocurrency exchanges. We start off with Chapter 5, which is a discussion of control and regulation as they relate to decentralized cryptocurrency exchanges. Alex, if a regulator showed up at your door today and wanted you to implement controls and adhere to regulations, what are the things that you could implement versus not? As a decentralized exchange, I imagine that you wouldn't be able to seize user funds, reverse trades, and all that. But there are some things that you can do and that you have done. Can you summarize what you have control over versus not?
IDEX, we only have control over the UI. and the part of the system that interacts with the smart contract in order to dispatch trades. So if someone came and forced us to shut down, we could take the website offline, we could take the UI offline, but we couldn't do anything to the contract itself. And so this is a bit of a nuanced point, but the fact that we dispatch trades to the network or to the smart contract ourselves, and we allow people to continue trading or we update the order books immediately, one of the things there is that we can't have people withdrawing from the exchange, from the contract, if there's still a trade in process. It's still waiting to settle. So we actually dispatch all withdrawals to the contract ourselves as well. So both trades and withdrawals are signed by the user, but dispatched by IDEX to the contract. One of the concerns, though, is that if our site goes offline, how could users get their funds out of the contract? We have a time-delayed withdrawal system that we call the escape hatch that users can interact with directly if their wallet and their address has not done anything on the contract after a period of time, after a few days. This gives users kind of the peace of mind knowing that even if the website goes offline forever, we're hit by a bus or whatever, their funds will always be safe in the contract and they'll always be able to get access to them.
A regulator could ask you to take down your website, to delist tokens, to cancel all trading that's happening on the platform. They cannot force you to reveal the names of your users. They can't force you to seize users' funds, and they can't force you to execute trades with a different set of inputs or parameters than what the user agreed to. So if the user said they're willing to pay up to a certain amount for a trade, that can't be screwed with. Is that approximately right?
That's exactly right. And I think this is one of the areas that we spent a fair bit of time digging in with our legal team. And there's actually a bill in front of Congress right now that would make it so non-custodial software providers, in this case, decentralized exchanges, would be exempted, I guess, kind of clarity that they would be exempted from MSB requirements. So it's kind of this interesting challenge. They've already talked about it for wallets, basically saying that if you create a wallet system that allows users to transfer money, in a sense, transfer cryptocurrency, but you don't actually have control of it. You're just giving them a way to use their private key to interact with the network. That is not considered an MSB. They have not provided clarity around decentralized exchanges. People are kind of trying to read the tea leaves and see where it's going to go. Like I said, though, there's a bill in front of Congress that would be great if it passed because, as you said, there's limits to what we can actually do, given that we only control the UI component and we don't control the blockchain itself.
Can you speak to your listing policy a little bit and the kind of tokens that you embrace and would love to see more of on your platform, and the kinds of tokens that either are in the gray area or that you have to reject outright?
We have all of our listing guidelines published on our site. One of the things that upfront we're looking for is any token that pays a dividend or has any of the kind of classic hallmarks of a security. The SEC hasn't given 100% clarity on how they feel about every ICO. They have said that they've taken some enforcement action against some that are clearly a security. They were either promising returns or, guaranteeing dividends, which we look for that information and are unable to list projects that have those components or those elements. Another thing we're looking at, and it is admittedly a bit more subjective, is for quality projects. And this is where it's a bit of a challenge because by listing on IDEX, there is an element of, whether we like it or not, there's an element of endorsement. The fact that it's been listed on the platform, users have come to trust us and believe that we're a place that they can find projects that are interesting projects using blockchain to solve a novel problem. And with that, we have to make sure we're kind of thinking about that responsibly. So that means working with projects to vet them and understand a little bit about the technology they're building. We actually have a team that Skypes and interviews, just has a brief conversation with all of the token creators. It's amazing how much you can find out in kind of 15 minutes about the user's intention and kind of what they're trying to do and why they're creating a blockchain token. Or if they choose not to show up to that interview process, that's also a pretty telling sign. So that's kind of how we approach it. And we're constantly kind of revising this because it's, like I said, it's a balance. If we don't list something, we've got users spamming us on Twitter and in all our different social channels saying, list this project, why didn't you? And then if a project doesn't work out, you've got a bunch of people complaining, why did you list this project in the first place? It kind of goes back to our ethos where we want to be democratic about it. Ourselves being bootstrapped product, we know that big flashy marketing budgets and 50,000 Twitter followers isn't always indicative of a great project. But at the same time, we need to be cognizant of kind of the reputation and inherent endorsement that comes from putting a token on our site.
It's amazing how much you can suss out just by asking someone to go on a webcam and show their face and discuss with them their project. That really weeds out a lot of the riffraff I found.
Absolutely.
I've recalled in the past you speaking to efforts to stop phishing attacks. What kind of phishing can happen on a decentralized exchange, and what steps can you take to prevent it?
So the phishing attacks that you see on a DEX are basically the same type that you would see on something like MyEtherWallet. The goal is to trick the user into thinking that they're at the DEX or the wallet website, entering in their private key information. And then once you have that, you have the ability to go in yourself and take that user's funds.
Just to clarify, so the goal of these phishing attacks is to obtain a private key, and you can insulate yourself against some of this, but simply by using a hardware wallet. Is that right?
Exactly right. So that's why we encourage people to use hardware wallets or even software wallets like MetaMask. If you go to a fake version of IDEX and you're using MetaMask, they actually don't get access to your private key because you're never entering it into the application itself. And this is where I mentioned this distinction earlier, but when you're using the real IDEX, you're entering in a private key, but it's all stored locally. It's never sent outside of your browser. It's just used on your local machine to interact with the website. Whereas if you go to a phishing site version of IDEX, they're going to record your private key. And as soon as you've done that, they're going to go and try to withdraw your funds and take them elsewhere.
One telltale sign that you're on a fake version of IDEX is if they don't even allow you to use a hardware wallet. Are there phishing attacks also where the goal is not to get the private key, but instead to just get a user to deposit funds into a smart contract that's controlled by the scammer?
I don't know if we've seen those. Most of them are essentially cloning the website, using a URL that sometimes is not at all related to IDEX, but the classic misspellings of it, IDEX something other than IDEX.market, trying to find some way to trick the user into thinking they're on the site. It's something that we've worked to combat. So we've been working with this company called Fishfort, spelled PHISH Fort. And they've done a great job at helping us identify and take down websites. I think within the first week of working with them, they took down over 60 fake versions of IDEX.
Wow.
It's unbelievable.
60.
The other popular thing we see is, so we have yet to release a mobile application. So we occasionally see, and this is something else they've helped us combat, but we were seeing IDEX Mobile show up in the Android store. And same sort of problem. Users would open it on their mobile phone, enter in their private key, and at that point, they've pretty much lost it.
So what they essentially do is, like, they're always scanning, likely in an automated fashion, for people trying to pretend they're you, and then sending in takedown requests to various service providers and app stores and stuff like that. Is that right?
That's exactly right. Yeah. I guess there's one interesting story of, we had a user that he fell for a phishing scam through some other medium. I'm not exactly sure what, but it wasn't through IDEX itself. And he had some funds in his wallet, but the majority of them were actually deposited into the IDEX smart contract. And the thief did not know that and did not check the transaction history. So the user was actually able to recover most of his funds because they were in the contract rather than in the wallet. And the thief didn't think to check there.
Let's move on to chapter 6, which is around the top blockchains for decentralized exchange. So decentralized exchanges are kind of inherently linked, or they always seem to be linked with Ethereum. What else do you think is in the running to be a platform for decentralized exchange? How do you see this type of exchange operationally happening with other blockchains in the future? What does that path look like?
So there's really two kind of criteria that I touched on earlier that are critical to, at least in this stage, making a DEX make sense in terms of building on some of these other platforms. The first one is just the smart contract capabilities. So at the moment, and perhaps never, Bitcoin does not support smart contracts. So building a DEX on top of that network is not technically possible. So that makes, you look at other ones such as Stellar, EOS, Tron, OneChain, Icon, a bunch of different other ones that are using kind of a smart contract approach. The second one that we kind of look at is the actual assets that are listed on the platform itself. So I think I mentioned that this is why the vast majority of projects have started and stayed on Ethereum for the time being, is because we're looking at what's the number of projects and tokens that can even be traded on this type of DEX. And that comes from the fact that cross-blockchain solutions are not there yet. So in terms of looking at where we're going next, we're really looking at which blockchains have properties that make it an improvement upon Ethereum. So for example, EOS is one that has a faster transaction or a higher transaction throughput and faster settlement times. So those are elements that make it potentially an appealing alternative to building on Ethereum. The second one is looking at which blockchains have assets and projects launching on top of them. Because again, if you don't have assets on that network, there's not as much utility to having a DEX platform. So that, I think you're also going to see it grow over time. I think you're going to see these other smart contract blockchains start to launch projects, maybe recruit projects from Ethereum. I think you'll see some projects migrate because some of these other blockchains have better capabilities or kind of better performance specs, if you will. So we kind of have our finger to the wind, if you will, and we're actually working to develop on some of those so that we can be positioned to expand IDEX to these other blockchains when the time comes.
Just to summarize, I heard you speak like in terms of a framework for considering other blockchains to build decentralized exchanges around, its functionality, what are the number of tradable assets that exist, and probably the size of the networks around those tradable assets, settlement time, and throughput. Anything else?
Those are the big ones. And it's really what is there to trade and how well can the blockchain support this type of trading that we're trying to design. One of the other interesting pieces is a lot of those that are focused on interoperability. So Icon, Aeon, and OneChain are examples of ones that are focused on bringing assets from one blockchain to another. So that's a really cool concept. The idea that you could have a proxy asset on this smart contract blockchain that allows you to trade and control an asset that's a primary asset on another blockchain. The big example being, can you trade Bitcoin in a trustless way without a third-party custodian, but through a smart contract platform?
Rootstock, something like that.
So I've been meaning to dig into Rootstock a little more. So the ones that come to mind are ones that use an approach to essentially have nodes in their network control both the issuance of assets on their platform as well as the movement of funds on the other primary blockchain. So you can think of it as nodes in the smart contract blockchain are kind of like a multi-sig approval process. It's not exactly that, but they have kind of a multi-sig approval process over funds on the primary chain, such that if you deposit Bitcoin into this smart contract blockchain, you would get a proxy Bitcoin that then you could use, you could trade, you could spend. When someone wants to withdraw, the process just happens in reverse. That proxy version is destroyed and they get back the original Bitcoin on the main blockchain.
I think the only alternatives that I have heard of gain any kind of traction, however small, around being a platform for token issuance is Stellar and Neo. Have you considered those? Are there others that you're actively considering right now?
So we are looking at both of those. I think you're right that it'll be interesting to see the evolution of what projects kind of move or launch on these different platforms. And I think it's going to be a combination of new ICOs, those that are just a new issuance in the market, migration of existing ICOs, those that maybe choose to go to a different blockchain if the performance capabilities of Ethereum are not there. And then also there's kind of this emerging class of tokenization of traditional financial assets. This idea that stocks, equities, bonds, tokenized real estate, all sorts of different, more traditional financial instruments, bringing those to the blockchain. Where does that start to emerge? A lot of people are excited about Stellar as an option for solving some of those more traditional finance products. Also hear a lot of buzz about EOS in terms of a blockchain that has better performance capabilities, and is something that projects are either launching on or migrating to.
Still very early days, nothing approaching critical mass.
Yeah, absolutely.
Let's move on to chapter 7. The topic here is actually sourcing liquidity. So as an exchange operator, how do you think about getting liquidity to move to your platform? I think this is kind of a tricky question because this is basic, like one aspect of this is just basic user growth, that in order to have a functioning exchange, you need a critical mass of makers and takers making or taking either side of the trade. But I know that a lot of exchanges purposely do activities other than just simple user acquisition to source liquidity for their exchanges and for their customers. Do you guys engage in any biz dev or partnership programs? Have you created any that are explicitly for sourcing liquidity in a more traditional sense?
So we don't have any direct agreements with market makers to date. It's something we've been exploring. I think there's a couple things that we've found have been instrumental in our success. One of them is just the design itself. So the fact that everything happens in real time in terms of order books and balances being updated, it's very conducive or complementary to traditional botting and algorithmic trading strategies. So your bigger liquidity providers are not sitting at the computer 24/7. They are managing it in a programmatic way. And part of that is they want to know that if they try and execute an order, that they're going to get that order. And they want to know that they can place and cancel orders immediately. So having those two components is critical for them to be able to adapt trading strategies that have been successful on other platforms and easily and quickly bring them over to a decentralized exchange.
Can your smart contract as it exists today, or your set of smart contracts, be extended to accommodate maker-taker schemes or incentivization programs?
It can. And in that case, actually, the maker-taker stuff, we have a couple different things that we've kind of explored on that front. So one of them is we have a membership token. So it's called IDEX membership. And this token, when users hold it in their wallet, actually the smart contract, it's recognized on the blockchain and it adjusts the fee percentage that the user pays. So if you have a full membership, then you actually incur 0 fees on the exchange. The fees are set by the exchange itself off chain, but we use this membership token to kind of recognize and understand, does this person participate in this program? So this is a way for users to kind of pay upfront, if you will, for their anticipated trading needs. So this is a very popular program for those who are larger traders and are planning to bring more liquidity to the platform. One of the other things we do is, so we don't have a scaled trading fee structure, but we do have our own token, our own exchange token, Aura, and we rebate that. We distribute that to users who trade on the platform proportional to the amount of volume that they trade. So this is an example where the more you trade, the more of this token you will earn. This token is actually going to have a role in our plans for future decentralization. So we want to take those off-chain components that we currently manage and migrate them towards a more decentralized architecture. And this token is going to be instrumental in running and operating nodes in that network. This is where users can trade on the platform, earn this token, and eventually actually run a node that will give them a percentage of the trade fees from the exchange.
The traditional maker-taker scheme that I've seen is one where takers pay a fee, makers either pay a smaller fee or don't pay any fee at all. And then part of the taker fee is given directly to the maker in the quote currency of the trade or just in whatever the scheme is denominated in, maybe US dollars. Do you see something like that in your future?
We're exploring that. So we do have a maker-taker differentiation where the maker fee is 10 basis points and the taker fee is 20 basis points. We're considering some of those other structures in terms of further reduced fees or rebates, but we haven't implemented anything yet.
Let's move to chapter 8, which is about different approaches to exchange tokens. I think a lot of people are familiar with Binance Coin. They're doing things like taking profits from their investment arm and using that to buy back BNB. They're actually paying a lot of their customers in BNB. You get cheaper trades if you hold or if you pay your trading fees in BNB. There's a spectrum of options that exist here. There's a range of different things that people are doing or that exchanges are doing with their native token. What does your token do? You mentioned you get free trades, and you mentioned that you get some kind of rebate that's based on the amount of trading volume that you've executed on an exchange. Are there any other components to this?
Yeah, so just to clarify, so we have two separate tokens. We have the membership token, which gives you free trades, as well as the alternative is you can choose to have a higher rate of earning those rebates. And the second token, which is known as Aura, A-U-R-A. Before I jump into that, I think you're right. You've seen a couple different strategies and designs for exchange tokens. I think BNB is obviously a very popular one, and I've studied it a little bit, so may have a few details wrong, but my understanding is some of the key benefits right now is you get discounted trade fees if you pay in BNB. That bonus diminishes over time and I think expires 5 years after the token was launched. You have the buy and burn program where they're using profits from the exchange to buy BNB from the open market and burn those tokens. Though I believe that is going to stop once the supply has been reduced to 100 million BNB. Unclear to me if buy and burn is going to continue after that point. And then they've committed to making BNB a core token or component of their future decentralized exchange. Imagine it may be something like if they have a gas fee like Ethereum, you'll have to pay using BNB. That's kind of one approach, but it's not 100% clear how, as Binance continues to have success in the future, how the value will accrue back to the BNB token. You can see some correlations, but it's not a direct relationship necessarily. But the other popular one is going to be 0x. 0x's approach is as a fee token where you have to use the token to pay fees if you're going to have a relayer that's using the 0x smart contracts for execution. The other piece is that 0x is going to have a future governance role in upgrading and development of new components of the smart contract system. This one we think is potentially problematic for a couple reasons. So there's a kind of well-discussed issue around fee tokens, this notion of the velocity problem. And simply summarized, it's the idea that users don't want to hold the token for any longer than they need to pay for the trade fee. Exchanges don't want to hold the token for any longer than they need to accept the fee because they have costs in dollars or Ethereum or whatever else. So you've got a bunch of sell pressure from both sides, and no one wants to hold it for any longer than is needed to transact. The potential change to this would be the governance aspect, which I think remains to be seen. How compelling is it for exchanges to hold that token, to have a say in the governance of the network? The other piece is that, we think it kind of forces a token on users and adds friction by making them purchase that token in order to use your software to begin with.
Another aspect of these tokens is that, at least on Binance, they have BNB as the quote currency for a number of their markets. Do you envision, in addition to having markets denominated in Ethereum, that you would have them denominated in IDEXM or Aura?
I think eventually we'd like to do the same sort of thing, right? To add it as a base currency, because that helps just increase liquidity and trading volume on that token pair itself.
Interesting.
And then so just to explore a little bit on our token design. So we're using Aura as a proof of stake token for the further decentralized future of IDEX. And there's a great Medium article that we published, I wrote with my team on how we're approaching this process. So if anyone's interested, come to our Medium and take a look. It's pretty detailed, and you'll see a kind of a sneak peek at how we're thinking about this in the future. But simply put, the idea is that we're taking the current centralized components of IDEX and putting them on their own network. This network will be powered by the proof of stake token Aura, and those who run nodes in this network will do the jobs and functions of IDEX today, but for doing so, they'll get paid a percentage of the trade fees from the exchange. And so this is, I think the term that I've seen from Multicoin has been work token. It's something you need in order to participate in the operations of the platform, Augur being another example. And as the platform grows, as you do more work, as it becomes more popular, you are actually able to earn more revenue for that work that you're doing.
Oh, that's interesting.
Yeah.
The return for doing the same amount of work increases as you hold more of that token.
Exactly. You hold more of the token, you get, it's that the payouts are a function of how much you are actually staking. And then in the staking token is also necessary to provide the security of the network. So, people are probably familiar with Ethereum's intentions to transition to proof of stake. So this is an alternative to proof of work mining where instead of using the hashing power and solving the hash algorithm to find this kind of this random number, and then in doing so, you're now incentivized honestly. That's the proof of work system, right? Where you spend all this electricity and energy to find the right inputs, and then you're going to get rewarded if you tell the truth. In this case, proof of stake, you're putting up these tokens essentially as a form of collateral. And if you don't act honestly, if you don't behave as you're supposed to according to the rules of the system, then you risk losing this stake. And so that's kind of how we envision this design is the Aura will be a proof of stake token. And those who stake Aura and run nodes in the network will get a percentage of the trade fees for doing so.
Conceptually, IDEXM is for traders, for basically members of IDEX, and Aura is for operators of the decentralized exchange, or operator is kind of a weird term, but sort of nodes on the network that IDEX is operating on top of.
That's exactly right. And as I mentioned, we're distributing Aura to those who trade on the platform. And we're trying to make the process as democratic as possible. So we're thinking of how we can segment the different functions of the exchange to make it so that anyone can participate in this node operation process. And we think that a staking token model is one that really aligns. There's this emerging field of tokenomics, token economics, of how do you use these decentralized crypto assets to incentivize and coordinate the actions of a group of diverse and unconnected individuals. So rather through coercion, how can you design an economic incentive structure that everybody's going to kind of row towards the same direction? In this case, we think that this staking token design is going to be instrumental in our future success. And you can kind of imagine this, there's this term at Amazon, the flywheel, where in this case, users trade on the platform, they earn the token for trading on the platform. They can use that token to run a node and stake and actually earn a percentage of the trade fees, which incentivizes them to trade more on the platform, tell their friends about it, bring more liquidity. And it's kind of this virtuous cycle where the more you trade, the more you earn, the more you have that you can earn through staking, and it continues to grow.
So IDEXM is for membership and reduced trading fees, and Aura is a reward for trade volume on the exchange. So the rewards are not paid out in IDEXM.
That's correct. They're paid out in Aura.
Let's move on to Chapter 9, which is just an exploration of the centralized aspects of IDEX as an organization. Can you tell us a little bit about fundraising, team size, location, where you're domiciled, all of those sort of things that often aren't talked about with regards to these projects, but I think which are nevertheless very interesting?
Absolutely. So from a funding perspective, to date, we have been bootstrapped from kind of an investment perspective. So myself and my co-founder are the two equity owners in the parent company. We have helped bring forward revenue or kind of use a different revenue model through the sale of IDEXM. So we sold 1,600 memberships in December and January of 2017 and 2018 to the general public. That was kind of an alternative revenue model that allowed people to essentially prepay for their trade fees through the purchase of IDEXM. Since then, we've been fortunate enough that we've been able to continue operations through the income from the exchange itself. We are exploring the option of strategic investors in our token. We think that there's some benefits there to either get people to kind of help us. There's some strategic investors that have capabilities that could, bring us to kind of where we want to be in the future. We think of those as either market makers and liquidity providers, because that'll help align the CITAs even further, or those maybe with other projects in the space or potentially other blockchains where we would want to take IDEX to. And
then team size, headquarters, where, what kind of entity are you and where is it located?
So the team is 20 right now. We have 11 engineers, 4 support staff, and 5 on the business side, as well as a couple different contractors that we engage with. For example, our PR company. The company is incorporated in Panama, and my co-founder, my younger brother, is down there. But the vast majority of the team is spread out all around the US and the world. So we've got myself in Chicago. We've got some developers in LA, San Francisco, New York, up in Texas, really all over the place. Similarly, our support staff is even more kind of decentralized, with some up in Canada, as well as one over in Vietnam. The support staff was great. So we actually found these guys. This was, kind of early days. We were doing every job from building the site, marketing, communications, support. And we had to sleep at some point. And so we just go offline and hope that when we woke back up, Telegram wasn't, too backed up in terms of questions from users. So we actually found our support guys. They were the ones who were just willing to jump in and answer questions and, showed that they had an understanding and a willingness to help others. So it was a great kind of example of promoting from within the community. And these guys have just been absolutely fantastic.
Do payroll in Aura or IDEXM?
So we do kind of bonuses in Aura. Our payroll is primarily in Ether, or others. We do have, conversions to fiat and direct, kind of bank payments for those who prefer that.
Chapter 10, our final chapter. What do you think the future looks like for decentralized exchange?
So I think there's a big component of technological advancement. So that's going to be kind of this cross-chain connectivity, right? The idea that you're going to take this property of an atomic swap that exists within a smart contract and expand it to connect to other blockchains. So really, how can you trade not just Ethereum-based assets, but also Bitcoin, Litecoin, EOS, et cetera, all through the same kind of decentralized and private key non-custodial architecture. The other component is going to be on just the improvement of the blockchains themselves. So as these blockchains start to scale and the cost of operating on these blockchains goes down, you're going to see it make more and more sense for users and exchanges to migrate their volume to these types of decentralized exchange architectures. And then one of the other pieces that I'm really excited about is just the increasing tokenization of assets. So 2017, we saw the ICO boom. Now we're starting to see a lot of the security tokens come on the scene, where this is more of a traditional equity structure, but in a token format that helps improve liquidity, as well as make it easier to issue and actually comply with some of the regulatory requirements around either lockups or which individuals can actually own and access these tokens. And I think you're just going to see that proliferation continue with all sorts of traditional financial instruments coming on the blockchain, as well as a continued development on the utility token side of new types of assets and instruments that we've never seen before.
So as hyper-tokenization ensues, it does seem like Ethereum is a natural fit for a lot of these, for tokenized real estate or REITs, for derivatives on the blockchain, and some of these bespoke derivative products that you can create on the fly. Security tokens, most of them, if I think about tokens issued by Securitized.io or TokenSoft or Harbor or Polychain, they're all ERC20 based. And I see no reason why you shouldn't be able to facilitate those types of trades with your exchange. What do you think about the notion of a security token exchange? Does that need to be different from any other exchange or not? Or even exchanges just for crypto, for non-fungible crypto collectibles. Do you think that requires a separate type of exchange, or do you think all of these things eventually just converge?
The way I think about it is that there's going to be this kind of fundamental underlying layer that allows for the exchange of assets. And then it's going to interact with either different UIs or different, maybe other partners to help satisfy other requirements. So in the example of non-fungible tokens, that's going to be a fundamentally different process. You're not going to have an order book for crypto collectibles, right? It's going to feel more like an eBay style process where users are going to post a specific item. For something like a security token exchange, you're going to have different requirements in terms of either onboarding users or some of the regulatory requirements. So in that case, you might partner with a third party who's going to know those individuals and check and make sure that they meet, for example, the accredited investor status that is required for a security token in the early days of its life cycle. So that's really what we're focused on, is how can we build that underlying base layer and then find the right partners to work with to start hosting and supporting kind of this emerging proliferation of products and projects.
I think something that's worth noting is that a lot of these security token platforms, to me at least, seem like they are most compatible with decentralized exchanges because they work by whitelisting the addresses of the Ethereum addresses of folks who are allowed to hold that token. So with a traditional centralized exchange, someone could actually, if they get around some of the systems that are in place, they can actually hold a token that they're not allowed to have. But on a decentralized exchange where the transaction or where the trade is settled to the blockchain, that wouldn't even be able to go through unless their Ethereum address is whitelisted. So the mechanisms for controlling who holds versus does not hold that token are on chain entirely. So it seems compatible with your philosophy.
Absolutely. And it goes back to that idea of programmatic assets. And I think regulators are, as they dig in more, they're in many ways excited by the promise of the fact that you no longer need someone watching to make sure that they're compliant. You can actually bake that compliance into the asset itself through the technology and the capabilities of these crypto assets. So I think it's a really exciting future.
Alex, you've been very gracious. Thanks for giving us so much time and sharing so freely of your wisdom and knowledge and experience. I appreciate you being here.
Yeah, you're welcome. Appreciate it, Clay. Thanks for the time.
So that concludes part 2 of this conversation with Alex Wearn from IDEX. I'm off to start working on the next episode. See you next week. That's it for this week. To sign up for our free crypto investing newsletter, listen to other episodes, or get the show notes from this episode, please visit flippening.com. I also invite you to check out the startup that funds this podcast, Nomics, spelled Nomics, at nomics.com. Finally, if you got value from the show, the biggest thing you can do to help us out is to leave a 5-star review with some comments and feedback on iTunes, Stitcher, or wherever you listen to podcasts. Thanks for listening, and see you next week.